The 2024 election ushered in a new era of uncertainty as Donald Trump returned to the White House. His first term, marked by both economic highs and lows, left many wondering what a second Trump administration would mean for the U.S. economy. Would it be a period of unprecedented growth and prosperity, as promised by the president and his supporters? Or would it be a time of heightened risk, marked by reckless policies and deepening economic divides? This essay will delve into the potential economic implications of a second Trump term, examining the policies of the past and the challenges of the future. The stakes are high, the national debt is soaring, social and political divisions are widening, and America's role as a global economic leader is being challenged as never before. The decisions made during Trump's second term will have profound and lasting consequences for the U.S. economy and its place in the world. To understand the potential impact of a second Trump term, it's crucial to examine the economic record of his first. The period from 2017 to 2021 saw a mix of positive and negative economic indicators. On the plus side, the unemployment rate reached historic lows, particularly in 2019, before the onset of the COVID-19 pandemic. GDP growth, while not reaching the levels promised by Trump, remained relatively steady in the first 3 years of his presidency. However, these gains were overshadowed by a dramatic increase in the national debt. The 2017 tax cuts, a cornerstone of Trump's economic agenda, contributed significantly to this surge. Additionally, the trade war with China, another defining characteristic of Trump's economic policy, created uncertainty and disruption for businesses and consumers. The COVID-19 pandemic further complicated the economic picture, leading to a sharp spike in unemployment and a recession in 2020. While the economy began to recover in 2021, the pandemic's long-term economic consequences remain uncertain. As Trump enters his second term, he inherits an economy still grappling with the aftershocks of the pandemic and facing significant structural challenges. Tax cuts were a defining feature of Trump's first term, and they are likely to remain a central element of his economic strategy in his second term. Proponents argue that tax cuts stimulate economic growth by putting more money in the pockets of businesses and consumers. They point to the initial economic expansion following the 2017 tax cuts as evidence of their effectiveness. However, critics argue that these tax cuts primarily benefit the wealthy and corporations, exacerbating income inequality and doing little to boost overall economic growth. They also point to the ballooning national debt as a direct consequence of reduced tax revenue. The question facing policymakers is whether the potential short-term benefits of tax cuts outweigh the long-term risks of increased debt and inequality. The debate over tax policy is likely to be a defining feature of Trump's second term. His administration will need to balance the desire to spur economic growth with the need to address the nation's mounting debt. Failure to strike this balance could have serious consequences for the long-term health of the U.S. economy. Trump's confrontational approach to trade, particularly with China, was another hallmark of his first term. He imposed tariffs on billions of dollars worth of Chinese goods, arguing that these measures would protect American jobs and reduce the trade deficit. However, these trade wars have had a mixed impact on the U.S. economy. While some industries benefited from the tariffs, others, such as agriculture and manufacturing, were hit hard by retaliatory tariffs imposed by China. Consumers also felt the pinch of higher prices on imported goods. The trade war with China created uncertainty and disruption in global markets, making it more difficult for businesses to plan for the future. As Trump begins his second term, it remains unclear whether he will continue his aggressive trade policies or pursue a more conciliatory approach. A renewed trade war with China could further damage the U.S. economy, while a more cooperative approach could lead to greater stability and growth. Section 5. Energy betting on the past or the future. Trump's energy policy has focused on promoting traditional fossil fuels such as coal, oil, and natural gas. He has rolled back environmental regulations, opened up federal lands and waters to drilling, and withdrawn the U.S. from the Paris Agreement on climate change. These actions have been praised by some for boosting domestic energy production and creating jobs in the fossil fuel industry. However, critics argue that Trump's energy policies are short-sighted and harmful to the environment. They point to the urgent need to transition to cleaner, renewable sources of energy to combat climate change and reduce dependence on fossil fuels. They also argue that investing in renewable energy technologies would create jobs and boost the economy in the long run. Trump's second term will be crucial in determining the future of U.S. energy policy. Will he continue to prioritize traditional energy sources, or will he embrace the transition to a cleaner, more sustainable energy future? The answer to this question will have far-reaching implications for the environment, the economy, and the nation's energy security. Section 6. The looming debt crisis. Can it be averted? The national debt has been a persistent concern for decades, and it has grown at an alarming rate in recent years. As of December 2024, the national debt exceeded $31 trillion, a staggering sum that represents more than 120% of the nation's GDP. This level of debt poses significant risks to the long-term health of the U.S. economy. A high level of debt can lead to higher interest rates, which can crowd out private investment and slow economic growth. It can also make it more difficult for the government to respond to future economic crises or other unforeseen events. Addressing the national debt will require difficult choices, including reducing spending, raising taxes, or a combination of both. Trump's tax cuts have exacerbated the debt problem, and his administration has shown little appetite for significant spending cuts. Unless addressed, the national debt will continue to grow, casting a long shadow over the U.S. economy and limiting its potential for future growth and prosperity. Section 7. A divided nation. The economic cost of polarization. The United States is increasingly polarized along political, social, and economic lines. This division has been exacerbated by Trump's rhetoric and policies, which have often sought to pit Americans against one another. This polarization has real economic costs. Political gridlock makes it difficult to address pressing economic challenges, such as the national debt, income inequality, and the need for infrastructure investment. Social unrest and instability can discourage investment and harm economic growth, and a lack of social cohesion can undermine trust and cooperation, which are essential for a healthy economy. Trump's second term will be crucial in determining whether the U.S. can heal its divisions and find common ground on economic issues. Failure to do so could have lasting negative consequences for the nation's economic health and social fabric. Section 8. America First, America Alone. The risks to global leadership. Trump's America First agenda has led to a more inward-looking approach to foreign policy and trade. He has withdrawn the U.S. from international agreements, imposed tariffs on allies and adversaries alike, and questioned the value of long-standing alliances. This retreat from global leadership has raised concerns about America's future role in the world and the potential economic consequences. The U.S. has long benefited from its position as a global economic leader. Its companies have access to global markets, its currency is the world's reserve currency, and its ideas and innovations are sought after around the world. However, Trump's policies risk undermining this leadership, creating space for other countries such as China to fill the void. As Trump embarks on his second term, he faces a choice. Will he continue to pursue an America First agenda that risks isolating the U.S. and diminishing its global influence? Or will he seek to rebuild alliances, re-engage with the world, and reaffirm America's commitment to global leadership? The answer to this question will have profound implications for the future of the U.S. economy and its place in the world.